Hi, and welcome to the Art of Taxes Part 2. We're so thrilled that you could join us again this week, and if you're joining us for the first time, welcome. If this is your first time and you weren't here last week, you can watch Part 1 on our YouTube channel. The content is different, so I suggest you do that. If your questions don't get answered tonight, I suggest you check that out. We are back again with CPAs Lisa Srtinovic and Kathy Plow to give a presentation and answer your questions. If you have any questions, you can put those in the chat, and either Lisa or Kathy will try to address those as we move along. We want to thank our partners tonight. Those include the Texas Bar Foundation, the National Endowment for the Arts, the Texas Commission on the Arts, and the City of Austin Cultural Arts. In addition, we've got some local partners tonight in Houston and Austin that I want to introduce to you and let them tell you a little bit about their services. Let's welcome Reyes from Fresh Arts in Houston.
Good evening, everyone. I hope you're doing well. I hope you're safe. I hope you've been recovering. So yes, I'm Reyes Ramirez. I am with Fresh Arts. We are a nonprofit arts organization primarily based out of Houston, Texas, but through our internet channels and digital mediums, our reach is further than ever before. And so what I want you to do is when you get a chance after TALA or at any point, you can visit fresharts.org, which should be going down at the bottom. Fresharts.org, where you'll find a variety of resources that we provide for artists and creatives. Because at Fresh Arts, what we hope to see one day is a landscape where artists can make a living off of their art. And so what we have is we have a series of workshops that you can access through our YouTube channel, but also through our website, because we have an artist resource library where we have toolkits that address various issues and things that artists should know. For example, how do you write a grant proposal? Well, we have a toolkit just for that, and a workshop, a virtual one, in case if you're more of an audio-visual learner. We have recently gone into podcasting, where we'll have a series of episodes that deal with questions that artists have about their careers. For example, the first episode, if I remember correctly, it seems so far ago, but the first episode was, should I or shouldn't I go full-time with my art practice? Where we invite one guest who did that. They went full-time with their art practice. And then we have someone who's working part-time and full-time, doing different stuff and still working on their art. And we're going to go through we went through the pros and cons, what made those, how they were able to make those decisions, and etc. But we have numerous episodes that deal with different topics with different guests each time. And so today we're partnering with TALA to let people know about this amazing resource and that they're an amazing resource. Because again, when you start to think of yourself as a creative and an artist, but also as a small business, there's numerous opportunities and resources that you can tap into. And so I just want to thank you for having me here tonight. Please visit fresharts.org. One thing that you should know is if you're still in recovery from various events, whether it be COVID-19 or the winter storm that just recently happened, one thing that you should go to is, if you haven't already, is if you go to disasterassistance.org, that will take you to the FEMA site, where you can then create, I believe, like a ticket to then go into the FEMA site and then get the aid you need. Another thing I recommend is going into your county websites and calling your counties. They will usually have a list of resources available. For example, in Houston, Harris County, they have many lists of resources that you can tap into that, again, you can find on fresharts.org. And so I recommend, again, contacting your county. They'll usually have the resources that are applicable to you. But one resource in Houston, if you're in Houston, is go to Baker Ripley. Baker Ripley right now has a utility assistance program. So if you're having issues paying your electricity and gas, they have a program to help you out with that. So again, thank you. Tonight's going to be chock full of information that I can't wait to get into. So see you around. Thank you.
Thanks so much, Reyes, and thanks for sharing those important announcements about assistance. I wanted to move to Emily Miller with Austin Music Foundation.
Hi, everyone. Thanks, Elisa. We're really grateful to be a part of the Art of Taxes Part 2 tonight. My name's Emily Miller, and I'm the Outreach and Communications Manager at Austin Music Foundation. If you're new to AMF, we're a local nonprofit based in Austin that Our mission is to strengthen, connect, and advance the local music industry and community. We do this through online workshops such as these, networking events, and one-on-one mentor opportunities. All of that is still taking place online due to the pandemic, but it makes our services available to everyone, no matter where you're tuning in from. We've been around for almost 2 decades in Austin, and so we're really excited to kind of be moving forward in this new digital chapter and being able to provide our services all over the country and in some cases internationally, which has been really positive for us. Let's see. Yeah, if you want to learn more about AMF, you can visit our website at austinmusicfoundation.org. You can also follow us on social media to find out about upcoming events and other networking opportunities. We're pretty much everywhere. You can just search Austin Music Foundation to find us. Yeah, we're just really excited to be a part of this event. We're grateful to TALA and Fresh Arts for putting this together, and of course to Kathy and Lisa for sharing their expertise with us. We know there's a lot of questions relating to pandemic relief aid and unemployment tax and those sort of income discrepancies that most creative people, I think, were facing in 2020. So yeah, we encourage you to ask all your questions, leave them in the comments, and definitely go back and review these videos back on YouTube. Thanks, y'all.
Thanks so much, Emily. And again, I just want to say, I think this is the 5th year that we've partnered with both of your organizations, Fresh Arts and Austin Music Foundation, for this particular art of taxes. So it kind of goes back, and TALA appreciates your support year round and just referring artists to us and taking care of our artists in our community. So it's been great to work with you, and it's great to continue to work with you online, and maybe we'll be back in person and we'll be able to see each other for another event at some point in the near future. So I guess let's turn to get started. Kathy, if you could bring up the first few slides, I'm just going to say a few things about TALA, and then I'm going to turn it over to you to get started. If you're familiar with TALA, you probably know this, but just quickly, if you're not, we do pro bono, which means a free matching program with attorneys and accountants across Texas for artists and small nonprofits that have business-related legal or accounting issues. On the slide, you'll see some of the things that we do. If you have specific business questions, a contract, or IP questions for intellectual property, things like that, please contact us. It's possible that we could match you with free legal or accounting help. Can you go to the next slide, please? So to become a member and qualify for that pro bono help, there are financial guidelines. You have to make under an amount to be able to qualify. That amount, if you're a household of one, is around $38,000. If you're married or have one child, that's raised to $51,000. It goes up based on how many people are in your household. There is a grid on our website that will explain that, and you can check and see if you may be eligible for those services. If you are eligible, the assistance needs to be directly related to your artistic practice. We also have a program that has the same financial guidelines for inventors. So if you are an inventor and you're interested in filing a patent with the USPTO, we could help you with that. The next slide, sorry, Kathy.
The next question.
Yeah, so the next slide tells you for $75 a year, you can ask as many questions as you want. We do qualify you financially each year. So once you're qualified, you become a member for a year and you can use our services during that time. If you're a nonprofit organization, that fee is $250. And if you're an inventor, that fee is $100. And next slide, Kathy. Just some upcoming programs I want to tell you about. Next Tuesday night, March 9th, we're having our first patent pro bono clinic. So if you are an inventor or you know an inventor that would like to speak with a patent attorney or agent for 30 minutes, please have them register for the clinic. That registration deadline is Friday. The clinic is next Tuesday. Our next Arts Legal Line clinic, which is for artists and small nonprofits, they can call in and also speak with an attorney. That next event is on April 6th. And you can find information about both of those on our website. We are conducting what we're calling our COVID-19 response program. We're doing free matches for pandemic-related issues. So if you have questions tonight on possibly your taxes, the Paycheck Protection Program, unemployment, maybe a contract that you have that you can't fulfill, anything related to COVID-19, we're going to attempt to match you for free. We're not going to have you join necessarily, and there is a form on our site to fill that out. out and just kind of let us know what you need, and we'll take a look at it, and hopefully we'll be able to help you out. Again, that website is TALARTS, TALARTS.org. And with that, I'm going to turn it over to Kathy, who's going to be leading tonight, and I'm going to get out of the way and we'll get started. Thank you.
All right. Thank you, Lisa, and appreciate all your help. And you know, I've been a part of TALA for many, many years and past president. And so it's a great organization, and, you know, you can't get a better value for your money when it comes if you need legal and accounting help. So with that being said, I want to thank Lisa for helping me out again. This time Lisa is going to be kind of given some assistance. She's going to answer the questions that you would have in your chat. So, you know, Lisa, yeah, I'll send them in the chat. So Lisa, just break in whenever you need to. Somebody, you know, please ask questions as we go along. So we should have time to do that. So I hope maybe you guys, as I said, you know, you were in, if you didn't go to part one, that's okay. Part one, we kind of talked really more about, you know, whether you're a business and, you know, accounting things and how to, you know, make yourself, you know, doing the separate bank accounts. And so we kind of talked about bookkeeping and accounting rules. But this time, this section, we're going to talk about taxes. And I know y'all just love taxes. Unfortunately, I do, and that's what I do. So, but tonight, one of the things that Lisa talked about last week at the end of her presentation was about the PPP loan and, you know, how to account for that. And so we're going to sort of do that part again, because we felt like, you know, number one is if you heard it, well, you'll hear it again. If you didn't hear it the first time, you know, that's great. This will be new to you. But if you did hear it this, you know, then you'll just hear it again. And, you know, you have to hear things 7 times before you get it anyway. So anyway, we're going to talk about unemployment, the PPP loans, and some other relief aid. We're going to talk about deductions, of course, income and deductions on your tax return. And, you know, we'll talk about home office. The Section 199 Cap A, which is this 20% deduction. I hate to throw code sections out. I'm not usually a code section person myself. But this was what they kind of tended to talk about. And I'm imagining probably most of you by now have heard, at least maybe not this code section, but that it was this 20% deduction that you get. We're going to talk about self-employment tax and, of course, estimated tax payments. And then we're going to talk about some other taxes tonight. So that's our agenda for this evening. So let's go ahead and get started. So let's talk about unemployment. I don't know if I want to say, I hope y'all were, a lot of you may or may not have been able to get unemployment if you had been laid off or whatever. And, you know, last year with COVID-19, those of you who don't work for an employer and get a W-2, that you get, you know, the 1099s, you've never been able to receive unemployment from Texas Workforce Commission. But with the CARES Act that came about, that changed. And so a lot of people that were self-employed were able to get this unemployment, which I'm sure if you were in that bucket, I'm sure it really, really helped a lot. So, but the sort of bad news about that is that, you know, it is going to be taxable income to you, or it is taxable income to you, and you will have to include that on your income tax return when you file your 1040. You should have already received those by now. And hopefully, if for some reason you didn't, you probably need to contact the Texas Workforce Commission to see what had happened. So whatever it is, as we've got it circled there in box 1, That's the total unemployment compensation that you would have received. And so that's what you're going to show on your tax return. I also want to just remind you, I don't know how many people actually did, but when you signed up for unemployment, there was one of the questions was asking whether or not you wanted federal income tax withheld out of your unemployment check. Hopefully many of you did. I don't know. It would have been the right thing to do or the better thing to do as far as that's concerned. But if you did have federal unemployment, don't forget to pick that up. Federal unemployment tax withheld is there in box 4. So don't forget to pick that up, showing that that has been, included, so that that can reduce your tax liability. So I just didn't want you to forget to do that. The other thing I just want to mention, and I hope nobody's had this as an issue, but I guess it's been about 2 or 3 weeks ago now, we got something, or I got something from the Internal Revenue Service saying that, there are still so many people out there in the world that are trying to, do fraudulent activity. And apparently there has been some issues with people having maybe your income, your name and your address, and even maybe your social security number, and they would have gone online and requested unemployment assistance, and they got it. And then, but now what's happening, and let's say, for example, you didn't need to get it, or you didn't apply for it, but they had your information and they did apply for it. So now all of a sudden here in the mail, you get this this 1099-G from Texas Workforce Commission saying, hey, you took out, $12,000. Well, obviously, you need to immediately, if that has something, if that's happened to you, you immediately need to contact the Texas Workforce Commission and tell them, hey, this was not me. I didn't get the money, and have them correct that, because, like all of the 1099s that we get, the W-2s that we get, all of that gets reported to the IRS. And so if it is something that is not right, it was a fraudulent activity, and I'm sure they're, go through the process of verifying that. But you don't want to be having that to be showing on your taxes, and then the IRS sending you a love letter saying, hey, Lisa, you didn't pick up that $12,000 that, I say you got. So
Kathy, I've put in the chat a couple of websites, including how to report things like that to the IRS. So if you've been in a situation like that, make sure that you know how to go about dealing with that. And of course, if you do have TALA as in your back pocket, we can help you with that type of thing.
Right. Well, hopefully nobody will have experienced that, but I just wanted to, bring that up just in case that happens. We've dealt with for several years now identity theft related to, tax returns, and hopefully, maybe I think everybody's at least known somebody that's had that as an issue. I will have to say, over the last 2 years, I think the IRS has done a very good job of really minimizing that, where the clients that I've had, I rarely hear that anymore. So all of their filters that they're doing in there must really be working, at least because there for a while there was way too many people. So anyway. So next, let's go to the Paycheck Protection Program. I'm not going to go into what it is and all of that, we did do a special PPP one with TALA, which, you know, you can get the video on that. But I want to kind of go over how you handle this, both from an accounting standpoint and from a tax return standpoint. And so, but before I get, well, let me say, before I get into this, we talked, and Lisa, I don't know if you want to come on here for a second and kind of see if maybe you know some new information. Last week, there was an announcement with the SBA that President Biden was going to make a special, I don't know, a special thing for small businesses that had less than 20 employees. And they were going to, it was a 2-week, it was going to be 14-day period. And as a matter of fact, that 14-day period is going to end on March the 9th. And this, they were going to utilize, instead of doing what we have did in the PPP loans in the past, of those that were sole proprietors, you know, you would have to take your income and what, for example, what happens if you didn't have, in other words, you know, if you're just maybe starting out, maybe you have a loss, maybe you didn't have income, you actually had a loss, you had a negative number. And then because you had a negative number, you couldn't take that number and divide it by 12 times 2.5 to apply for that loan because you didn't have income. Well, so what they were going to do is they were going to base it on gross income rather than the net income. And they were supposed to send out some guidance on how this was going to work. Now, I went on the SBA website earlier this afternoon to see if I saw anything, and I did not. Lisa, do you have any additional thoughts or comments or insider information that I don't?
Unfortunately, we're at the same point. Neither the IRS, SBA, AICPA, none of the alphabet has given any guidance on what's going on. I have heard that there's some rumblings that instead of making it just until March the 9th, they're going to extend it even past March the 31st.
Yeah.
Okay, so I have heard that in the rumors, but there is no guidance on what the calculation is going to be, nor is there any guidance on if you've already applied for something, can you apply differently or in addition to? All of that is still up in the air, unfortunately.
Well, yeah, I haven't heard. And remember, this whole new PPP application, whether you were going for the second draw or the first time draw, that was going to be up at the end of March. Well, you know, we're already in March, you know, and so, I mean, that's almost here. What do you think on that calculation for these, you know, small businesses? You know, if they use the gross income, do you think that they're still going to have the rule that you still must have a decrease of, you know, the 25% or more per quarter? Or do you think this is just a whole different calculation?
Gosh, golly.
We don't know, do we?
You know, given the spirit of the reason behind the PPP2, which is, hey, if you continued to have a decrease overall, but you kept your employees on board, which was kind of the spirit behind what they were talking about. I would say yes, they're still probably going to look at some sort of, did you have a decrease? How much? Don't know. And whether that's gross income or net income or which lines of what they're going to be looking for. What we do know is that really you must have your accounting all up to date. Your bookkeeping must be all up to date. You must have a separation between your personal and your business accounts. Okay, absolutely key is that separation, and all of it must be up to date. So no longer can you think of yourself as just, oh, I'll wait until just doing my tax returns, and that's when I'm going to catch up on all of that paperwork that's such to do. No, right? You must do it out all throughout the year. And honestly, it's more than just to do your tax return. You really are a business. And if you were on last time, you remember that the definition of the IRS for you guys to be in business is the exchange of goods or service. You guys do that all the time, every day, right? You exchange your goods or services for compensation with the intent to make a profit, right? So if you really mean to make a profit out of this, then by golly, you are in business, and you need to then act like it, which means keeping all of your accounting and your bookkeeping on all of that stuff up to date on an ongoing basis, not just for taxes.
Well, I think, thanks for the reminder. I think at this point, about all we can tell everybody is that we don't know. We wished we did, so we could communicate that to you. But my suggestion is to keep your ear out for, on the news, the newspaper, local news, certainly, and go on the Small Business Administration's website, the SBA.org, and see if they've got anything, because that's what I did. It's right on the home page, the banner at the top. It talks about, buying proposal. You can just click that and it'll take you to the screen. And I was kind of hoping to see, something there about the calculation, but I hope if they still, it's been, next week it'll be 2 weeks and we're almost done with this week. So if that's the case and they still don't have out the guidance, then I just think they're going to have to push that deadline, out. So, just keep your eyes and ears open on that. And, you don't want to miss that opportunity. So just, do the best you can. So, okay. So I just wanted to bring that up.
Our crystal balls aren't that great, but I have put in the chat all of the links to those websites that Kathy mentioned. So make sure to go bounce over there and catch those.
Okay, great. Thanks, Lisa. Okay, so let's go ahead and go into this slide. So let's say, for the sake of argument, you got the PP loan, back, and this is kind of really more of what we're looking at is those that received the PPP loan from 2020. So when you got the loan, from the accounting standpoint, because it's a loan, then you would code that, obviously it was a bank deposit, and you would code that to a liability, because at that point, until the bank and the SBA tells you it's forgiven, you still owe that money. So from an accounting standpoint, it's a liability. And then, so you would just record that. So let's say you got $10,000, you record that as a liability, that you owe that $10,000. From a tax standpoint, on your 1040, or even if those of you, I'm going to kind of really more talk about the 1040, but it would be the same if you're filing a partnership return or a SEBS or something like that. From the tax standpoint, it would be, you're not going to do anything as far as your tax return is concerned. So then the next step is, let's say that they've decided, okay, the loan is forgiven. So on your accounting records, then you're going to, sorry guys, debit the liability. So you're going to zero that liability out and you're going to credit other income. So you're going to show that on your accounting records as other income, but it is not taxable income to you. So on your tax return, you're not going to put that anywhere on your tax return, on your Schedule C or anywhere else on your 1040. Now, of course, you got the PPP loan and you've got now these expenses that you use that PPP loan to pay for. Well, from an accounting standpoint, you're going to go ahead, you're going to show as it is salaries. You're going to show it if you had for rent or utility cost. All of those, the expenses are going to be the same. On your tax return, on your Schedule C, you're going to go ahead and record those expenses on your tax return, just like you would any other thing. That does not change. So there was, so that's about the PPP loan. But then we had some other items of relief that we were able to get. So the first one was the EIDL grant. If you remember, if you actually, if you had employees, then you would get $1,000 for each employee. But if you were self-employed, then you should have gotten just $1,000. So that was a grant. And once again, on the accounting side of it, it's considered other income. So you would just deposit that money and show it as other income. But on your tax return, because this is a grant, then you don't put that income anywhere. You don't put it on your Schedule C. You don't put it on your 1040. Nowhere. Those that may have received the EIDL loan, now that is a loan and you will have to pay that back. So if you got an EIDL loan, then on the accounting end of it, you're going to show that as a liability, just like we did the PPP loan. And so then on your tax return, the only thing that you're going to be deducting as expenses on your tax return is when you start to pay that loan back, then you're going to be able to deduct the expenses that you paid on that loan. So that's how you handle it on the tax return side. And there's some other relief grants. From my understanding in Austin, and Lisa, I don't know if you want to kind of talk about this, but there were some other relief grants that some people in Austin got. And so if that's, Lisa, you want to talk about those grants that the Austin people got? Because I don't think the Houston people got anything like you guys did.
Oh, well, Austin really did try as a, from the governmental standpoint to try and support some of its venues and artists. And right now, although there's no federal guidance on what those, how to treat those, right now it looks as though they are going to be treated just the same as the PPP loan forgiveness and the EIDL grant, which is a non-taxable income. That's as of right now. Of course, that could change. In addition to that, Legacy Bridge had a question with regards to some other SBA relief compensation and asking whether or not that was the same, to be treated the same as the PPP. My assumption is that they are talking about if they have a separate SBA loan and they didn't have to pay on it right now, would that be treated the same? And the answer is, Kathy, I assume that from an accounting perspective, they still have to accrue their interest. But if they didn't pay anything and they didn't owe anything, then from their tax return, there's no implication there
Right.
at all. So
Right.
Yeah.
Right. Because, you know, the SBA has so many other types of loans that are out there. The one like the EIDL grant, it's really for a disaster. And, you know, I know those people that were here in Houston during Harvey, you know, there may have been some businesses that got an EIDL loan as a result of that. So when the COVID hit, they kind of use that also as a disaster. So there are a lot of different other things that SBA has. As a matter of fact, when I was on there earlier today, I saw they've got kind of down on their homepage, you know, if you, especially women-owned businesses, you know, they have a lot of different particular things to help women-owned businesses. So don't, you know, TALA, we've got a lot of stuff, but there are a lot of things that the SBA can do to help you also with your business. So anyway, that's kind of what I wanted to go over with that, just because that's kind of been on our minds, and we wanted to make sure that some of you that may not have been on the first one was able to hear that about how to handle that. So our next topic here is income and expenses. So I remember when I started in public accounting back in 1984, a long time ago, one of the first things that I learned was that the IRS rules always stated that you must include everything income from all sources unless it's specifically excluded. So we just turned around and talked about two specifically excluded things that, based on the law, we don't have to pick up, and that's the PPP loan and that's the EIDL grant. So even though that was income to you, it's specifically excluded due to the CARES Act. But basically everything else, you got to pick it up, just as we said. All income, you know, in the form of whether it's cash, check, credit card, PayPal, ACH, et cetera, wherever that's coming from. I also wanted to bring up something too, although I don't know that any of you that are on the call here, on the meeting, the Zoom, or YouTube, I say, I only did this because I just saw something yesterday that I read that is an audit thing that you just may want to just sort of be aware of and have in the back of your mind. Because even though you may not have this specifically, you may know somebody that does. When you receive, several years ago, the credit card companies, talking PayPal, you know, the merchant services and all these people, they came out with a new form many years ago called the 1099-K. And basically what that is, it's a statement from the credit card companies to you, telling you how much per month that you have received in credit card, you know, transactions. Now, in order for that credit card company to give you a 1099-K, you have to have had at least $20,000 worth of payments from the credit card companies, other people paying via credit card, and at least 200 transactions. So, you know, $20,000, maybe you might have got it, but 200 transactions, that's, you know, that's quite a bit. You know, now you think about, you know, a big retail store or a restaurant or whatever, you know, obviously they would be getting these 1099-Ks. But the reason for bringing this up is that this has been, you know, the IRS always matches, as I said earlier, W-2s, 1099s to your tax return. The 1099-K is no different, but there are many problems, or there are many issues of why that 1099-K would not agree to the total income that you have on your tax return. And so apparently a lot of people are getting audited because the 1099-K may be more than what the tax return is showing on the Schedule C. So if by chance you happen to have, if you're in that bucket to where you actually did get one, and it does, and you would be, you know, having something different because maybe you had returns, but those returns aren't showing on that 1099-K, then you need to just make sure that you show that on your tax return of why there's the difference, so that the IRS won't come and audit you. So anyway, enough said on that. The only other thing too, which is something that a lot of people probably do, but don't really, I'm assuming, report it, and that's bartering. And I believe Lisa talked about that last week. So for example, what we're talking about is, let's say that I see, you know, one of you guys have done a wonderful, beautiful photograph of the snow that we had a couple of weeks ago, and I want to buy that photograph that you had for $200. And so, but I don't want to give you cash, but I said, you know, hey, I will trade my accounting services or my tax return services for that photograph. So that's what we call bartering. But what that means is that I would, you know, have to pick up that $200 of income. Did I say that right? The $200 of income and the expenses on that. And a lot of times people don't pick up that income from when they've bartered with somebody. So I will admit it's something that would probably only get caught in an audit, but you know, you need to, as we say, report all of your income unless it's specifically excluded. So income is really not a problem so much. It's more in the expenses. There's a lot of expenses. And I'm sure Lisa's probably had the same thing that she experiences when I've been doing these classes. Everybody's like, well, what can I deduct as expenses?
Yep, that's a super common question.
Yeah. And, you know, it's, you know, and I tell people, I said, well, I don't have like a big long list of all of the expenses that you can take, but you know, we can kind of give you a few of them and kind of tell you where to go. So cost of goods sold, if it is something that you're, you know, a product that you're making and you have you know, various things that you need to put together to make this one product, then you know, you're going to have those purchases for those supplies in order to make, you know, whatever it is you're making. So that's the cost. That's what we talk about, cost of goods sold. What are the cost of all that equipment, or not the equipment, but the supplies, the materials that you would need to pay, you know, pay for that to get it together before you sell it. So we have that's one section. And then we have of the cost of your just actual operating. Obviously, business expenses, as we say here, must be ordinary and necessary. So one of the things is mileage. It's usually best, I don't want to say best, but most of the time, it's easier to just take mileage on your automobile rather than take individual actual expenses. And when we talk about actual expenses, we're referring to gas and, you know, repairs and, you know, tires and, you know, auto insurance, that kind of thing. All of those you can take as actual expenses, but you still have to take it based on your business percentage usage, because if you're using your car both for business and personal, you can't take 100% of it. So mileage is designed to take into consideration those kind of individual costs. And so every year the IRS changes that mileage rate. So what you have here in our slides, it's 57.5 cents for 2020, and it's 56 cents for 2021. It fluctuates. A lot of times it fluctuates based on the gas prices, obviously. So, but once again, one of the things you have to do is you need to keep a mileage log. And I know that's really difficult, and a lot of people don't do that, but it's really, really important, not only for, keeping track of it for the IRS purposes, but also, keeping track of it in the sense that you could be shortchanging yourself. You may think, oh, well, I drive, $100. I might drive 100 miles a week, but if you actually really plotted it out, maybe it's 150 miles a week. So you'd be shortchanging yourself. So you want to make sure that you keeping a mileage log. There are all kinds of different tools out there to be able to do that. It's helpful. Having Google Maps is really a help too if you are trying to recreate that. But don't try and recreate it. Do it as you do. I imagine this past year, I don't know about you guys, but I'm working from home since March of last year, and so my mileage going to and from work, which is not a deductible expense, by the way, is it dropped down tremendously. So you may not have much in the way of mileage for this past year. But mileage is definitely something you can deduct. Health insurance premiums, I mean, if you're paying for it, whether you're paying, a health insurance as a private policy, or if you've gone to the marketplace and got insurance through that marketplace, you can take a deduction for that health insurance premium if you were a sole proprietor. We talked a little bit about interest expense on loans like the IDA loan or any other maybe kind of loan that you have. Credit cards, I'm sure, many people have probably lived a bit on their credit cards this past year. If it is and hopefully you have had your credit cards as a business credit card and not a personal. It makes things a lot easier, but the interest expense that you pay on those credit cards is a business expense. Legal and professional fees, dues. We talked about the TALA membership fee. That is definitely an expense item that you can take. That's pretty self-explanatory. Rent, obviously. Oh, did you have a question, Lisa? Or
yes, Tess Doyle is asking, are ride share costs deductible? I assume, I'm going to make a lot of assumptions here, right? That they are either going to the art store to pick up supplies, if they are going to a gig, if they are going to pick up, help me out here, Kathy, what else can they actually deduct those rideshare costs for?
Well, I guess if they were maybe, I mean, it's kind of hard. I'm thinking about, in the past, we would always, a lot of times we would take clients out to lunch or potential, business associates out to lunch. And, that would be something. But, with COVID, people aren't doing much in going, having much of those expense, those type of expenses. But, I would agree with you, as long as it's got to have a business purpose.
Absolutely.
You have to have it as a business purpose. Therefore, just to go, take the ride share to go get something to eat, through the drive-through and come back is not going to
Right.
I don't think that's going to cut it, but.
In addition, if you are just going, like if you have a studio that you go to every day, that commute also doesn't count either for the ride share or for your mileage, right? Moogle 310 is asking about what about going to art class? So if there's like an outside, if we were doing this seminar live and they had to travel somewhere, yes, Kathy is nodding her head. Absolutely, that's deductible.
Yeah, I would see that now. We're, I guess, I'll put I need to get me an IRS hat.
Kathy,
what an idea. IRS hat. If as an IRS agent, I would probably want to know, well, do you have your own car? Or is that, do you have other transportation, or is that, why are you doing that? Because maybe it would be cheaper if you did your own car or whatever. But I know that's come up in the past. But I would say for the most part, it's probably fine as long as it's not excessive. Anything is in moderation, right?
Absolutely. And the other example that Tess Doyle mentioned is, well, what if you are actually on a business trip? So here we are in Texas, and I go to a seminar in Denver, Colorado. If I take an Uber from the airport to the facility, then yes, that
absolutely. Yes, absolutely. Certainly in that case, because whether you're doing it, we were talking earlier about going to New Orleans. That was when I went almost 2 years ago to New Orleans. That was really the first time that I had ever. We did Uber the first time, and that was what we did every other time because we didn't drive. We flew in, so we didn't rent a car. And it was so much, it was especially in the French Quarter. We probably didn't have more than a minute wait. So definitely if you're on business, out of town, for sure, not a problem there.
So I have another question from Lewis, who says, what if I eat at a restaurant if I just finished playing? I assume an instrument, maybe at a gig.
Boo.
That's about, are you out of town? Right? Are you with other band members? Are you with prospective people that can help perpetuate getting you more gigs, right? Maybe maybe my husband who has a production studio, maybe you're out with him. Then the answer would be yes. If you are just by yourself, that's
it's almost like you're commuting, you're, going from, your house to your job and back. When you're self-employed, you can kind of do that. But when you're like me and as an employee, I can't deduct I can't deduct mileage from my home to my job, but I could from my job to go to a client and back to my job. So when you're talking about mileage, it's quite complicated, and but I think just for the most part, you should be fine. And so on rent, just quickly, I just want to say on the rent, that's rent if you're renting a studio space, rent if you're, rent, you can rent a car, certainly. That's deductible, especially if you're out of town. But we're not talking rent in the sense of your rent for apartment. This is rent for a business, space. Travel, out of town, certainly out of town travel is expense. You can take the deductions, and we're talking, airfare, hotels, rental car, that kind of thing. And meals, we've had since the Tax Cuts and Jobs Act a couple of years ago, we had some changes in the meals issue. But right now, what we have because of the CARES Act was they were going to give 100% deduction instead of 50%. So for 2020, those of you that are doing your 2020 tax returns right now, it's only 50% still for your meals. And that means it doesn't matter whether your meals are in town or out of town. It's got to be business purpose though. And you've got all the substantiation requirements that you still have to do. But for 2021 and 2022, you will be able to take 100% of that. So that's a nice little perk now. Advertising, education, the comment, about where I go to a class. Absolutely. If you're going to further, like with me as a CPA, all the education that I take, that's for, to help in your, what you do, definitely. Repairs, I guess that kind of depends on what it is you're repairing. I mean, if you're a musician, for example, definitely if you have to have repairs to your instrument, whatever. Supplies, I mean, that's office supplies, all kinds of things can be in supplies. Bank fees, if you get charged a bank service charge, wire transfer fees, those kind of things, analysis fees. License, I'm a CPA, so I have to pay for my license renewal every year. If anything that you guys do something like that. Subscriptions, that can be subscriptions to, I still take some magazines, right? Could be subscriptions. I still take the newspaper. But also it could mean, when we talk about software, obviously software is, but, a lot of software now is based on a subscription price. So like those of you, and I'm sure all of you have QuickBooks or something like that, that monthly fee is definitely an expense. Utilities, once again, we're kind of looking at it from the standpoint if you actually have like a studio or you're renting space or whatever. And so we're, kind of talking about those type of utilities, certainly telephone, internet, those kind of things. It's not in the slide, but I'll just give it to you. And Lisa, you might want to put it in the chat. The IRS publication 535, which is business expenses. It's a great resource to kind of give you even some more ideas of some expenses. I realize that the expenses that we are referring to are really expenses for any business. Obviously as artists, you may have, certain things like, if we talk about musicians, I'm thinking about sheet music or well, you probably do it on the computer, but, those kind of things that maybe not necessarily what you would typically see listed, but those are expenses. So if you just kind of keep in mind any expenses that I have to do in order for me to do my craft or build or paint or whatever it is I'm doing, then those are should be legitimate expenses. They may be, like in the sense of the meals, maybe 50%, but they can do that. So let's talk about office and home deduction. I would imagine, we may even have more independent contractors, I will say, because if you're an employee like myself, I can't, take office and home deductions. But if you're self-employed, you get a 1099 NEC, the non-employee occupation, then you can look at taking office and home deduction. The general rules, and this used to be a really hot item for the IRS to audit people. And but they've really over the last few years really kind of lessened the that audit potential, but you still have to have a certain few items. And the main thing on the general rules is basically that you can use a portion of your house or an apartment, that it's got to be used exclusively on a regular basis, as either your principal place of business, because maybe you don't have any other place to you don't have an office to go to, that you use to meet with clients or your customers, and it's got to be in connection with your trade or business. Now, I know I have a client, and I've had several over the years that I've been doing this, where they had actually turned their, they own a home, and they had actually turned their garage into a studio. So it's an actual separate structure. And so, if you have something like that, that surely makes things a lot easier. But how to calculate the business percent, what you do is you take the square footage of that room that you're using, and then you divide that into the square footage of the whole area. So let's say you live in an apartment. Excuse me. What you have to do is you're going to have a totally separate area. If it's not, a separate bedroom is the best thing. So if you're live alone, if you happen to have a 2-bedroom apartment, 1 bedroom is your office and the other one is your bedroom. That works fine. You would take the square footage of that bedroom and you divide that into the square footage of the whole apartment. And then that is your business percentage. If you're in a house, now if I have a house and half my house is my office, basically. And so I would take whatever that square footage is and divide that into the total of my square footage of my whole house to get the percentage.
Absolutely. And Kathy, same with us, right? My husband's music studio is the entire basement area, and that is a square footage, and it is a dedicated space. Again, it must be dedicated. He can't both record music there and work out. I mean, I like it when he works out. Don't get me wrong, but he can't use it as a gym also, right? So it can't be a dual use area. And one of the questions earlier was, I think it was related to the PPP loan and the forgiveness, and how Schedule C people and rent and how all and utilities all kind of mix in there, especially when you have a home office. And if you are a Schedule C and you got, so you're an independent contractor, you're a sole proprietor, you're a gig worker, that type of thing, right? And you got a PPP loan. If it was deposited into your personal bank account, of course, that's not the way that we would recommend it. Okay, we recommend that you put it into your business bank account. But if it was immediately put into your personal bank account, then the forgiveness piece of it is going to assume that it was 100% for payroll.
Right.
Okay. Right. And it has nothing to do with you paying rent or your own utilities or any of that. Okay. Right. So I just wanted to make sure that we got that.
Right. I had a client, he wasn't an artist, but he had gotten laid off back in April when all this happened. And so he decided to go to business for himself. And he said he turned his man cave into his office. And so he said, well, this is how much the square footage is, and this is how much the square footage is for my whole house. But he said, but we also use the dining room to when I have my investors come in and we sit around the dining room table, and that's sort of our conference room. And I said, well, the man cave is great, not a problem. But I said, the dining room table, I said, do you eat there? Well, no, we have a island in the kitchen, right? And that's where we eat. He said, but we sometimes play, games or do puzzles or something. And I'm like, no, it's got to be used exclusively. So next the dining room table, we'll just take the man cave. So, but anyway, so that's how you calculate your business percentage. And then we have, and this is on this office and home deduction is on a form 8829. When you look at that form, you will see that it's got in the middle kind of some boxes, and it has boxes for direct and indirect expenses. And basically the expense, so let me go back to the expenses. What you can take is if you're renting an apartment, you take the rent. If you own a home, then you are able to take the interest that you pay on the home, the property taxes that you pay on the home. If you own the home, you are able to take the home owner's insurance. If you rent and you do renter's insurance, then you can take the renter insurance. You can take the utilities, gas, electric, water, and those and repairs. So the way this works is everything that I just mentioned that is for the whole apartment or for the whole house, that is in the indirect expense column. So that indirect expense, what happens is, let's say your business use percentage is 10%. So those items that are in the indirect expense column, you would multiply that by 10% because, the electricity in my house, it's for the whole house, but my business usage is only 10%, of that. So that's why those would go in the indirect expenses, so it could take the business percentage. But let's say, for example, that I have a bedroom, or, in my case, and you guys can probably see that in this room that I'm in, it's red. And let's say I decide that I'm going to paint it blue next week. Well, all I'm going to do is paint this one room. So that is the cost of that is a direct expense to that room. And so that's kind of the difference between the two when it's kind of all over. If you had a house and you put a roof on, or do shoot, we just had a bunch of plumbing repairs, right? That is something that's all indirect because you're only going to take a percentage of that. Depreciation expense, this is something that I honestly really don't have many clients. I don't know that I have hardly anybody that actually takes depreciation, and you can, on your house. I mean, this is not for an apartment. This would be for your house. But one of the things that you have to do with all of this that I'm referring to is you've got to have those records. You have to keep all of those receipts, to whoever like I pay Reliant and Centerpoint. You have to keep all of those receipts. Well, if you just don't want to do that and you want to kind of be, I don't want to say lazy, but just don't want to do all the record keeping. The IRS came out back in 2013 with this revenue procedure, which is a simplified way of doing this office in the home. And basically what they say is, okay, you don't need to keep receipts. We'll allow you to have a 300 square foot business portion of whatever you have. And we're going to give you $5 for that, for each square footage. And then the maximum that you can take as a deduction for this home office would be $1,500. So it's basically the $5 times the 300 square foot. So that 300 square foot is about a 20 by 15 room. So if you want to do a simplified version, you can certainly do that. So that's office and home. I would definitely kind of recommend doing it as long as you really have, to where you've got exclusively. You can't have an office and home if you have an office someplace else. You're renting space as an office someplace else, and then try and do office and home. Then you can't do it in two different places. Lisa?
So Rachel had a question about, what about if I have multiple businesses and I have a dedicated space, right? How can I deal with that?
Okay, well, like this one guy that I was telling, he started 2 businesses, and what we're doing is we're just taking the total expenses and splitting them half and half on each, so if she has multiple, then if you've got 5 businesses, do it 1/5 on each one.
So what about the home office deduction, the simplified version?
I would probably do the same thing, maybe. What do you think?
Well,
half and half, or are you thinking you could do 300 for each one?
You could do it half-half. The easiest thing, though, might just be able to just put the entire amount on one of the Schedule Cs. I mean, how many square feet are there when you multiply that by $5? It's like
not much.
It's not that much, and as it turns out, it has the exact same effect on your own bottom line of your tax return. So which one you put it on?
Right. Well, and just one other final thing about the office and home is that you can't have the total of these expenses to create a loss on your Schedule C. Or, for example, if you already have a loss, you can still take the office and home deduction. But what happens is that the office and home that you're not able to take because you already have a loss, that will get carried over to the next year until, or it'll keep carrying over and adding up every year. If you have losses for 3 years, it will just continue to add up and add up and add up and carry forward until you have income to offset it. So even though you may not get the full benefit of the office and home deduction, for example, in 2020, but if it'll carry over to 2021, and let's say you're back in business this year, then everything will be okay. So you don't lose that deduction. So okay, so here's just a couple of screenshots. These are the business. This is the expense section of the Schedule C, and you can see that it has a lot of the pre-printed expense categories that we talked about earlier. Advertising, car and truck, contract labor if you happen to pay other people, insurance, legal professionals. So what I would usually do, I would tell a lot of people sometimes that, when they were setting their books up, to at least start with these expenses, and then you can add to, what may be specific just to your type of business. And then you can see further down here on line 30, that's where it has the expenses for the business use of your home. And it says attached form 8829. So that was what I was telling you about, unless you use the simplified method. And if you use the simplified method, then that's where you're going to put that there and carry that over onto line 30.
So we do have another question about the home office deduction.
Okay.
What about having a home office and a small business warehouse, for example, where they might store some large painting and supplies? can they deduct home office and the cost of the warehouse?
Well, I guess part of that would be, is there any, if there's not a way that you could use that warehouse as an office, or do you take people there? You know, there's I know some case law way back when, what I remember, I don't know if you remember this, Lisa, where there was a doctor that was, trying to take home office because he didn't really, have a place in the hospital to, do his paperwork and stuff. I mean, there may be some, some things that would have to be looked at a little more deeply, if you will, on that, without just, saying yes or no or whatever. But, a lot of it is just going to depend on, do you really need the deduction, that kind of thing. You kind of got to take all of it.
It depends. It depends.
Yeah. It's always that it depends, right?
So I see that we're really coming up close to these exciting new other types of taxes that we need to think about. We've got about a 15-minute window.
Okay. All right.
We've got some great questions coming in, you guys. Thank you so much for participating.
All right. Well, I was just going to say, here's just another screenshot of the whole Schedule C that we have there. I'm sure some of you are probably already familiar with this. The Section 199A, this is that 20% deduction that I referred to earlier. This was a new thing that came out in 2017 with the Tax Cuts and Jobs Act. And, Lisa mentioned, she talked about it in our last week's class, but she mentioned it a little bit again earlier, of whether you really are a trade or business. And, somebody that's just doing something for a hobby is not going to get this 20% deduction. So it's very important that you can say that you are a qualified trade or business. The problem that came into play with this 20% deduction was that they had the rules saying that if you were a specified service, trade, or business, that you could not get the 20% deduction. So performing arts was one of them. Legal was one of them. Accounting was one of them. So a lot of people, that do specific trade services were not able to take this deduction. However, the one thing that, you didn't have to worry about was that there is a income level. So in other words, cap. So in other words, you can get that even if you are a specified service, trade, or business, if you were single, and as long as you make, excuse me, less than 163,300, which is the 2020 number, then you can take that. So, they got us all excited about this. And then, but most of, the people that are here are going to be way less than that. So you'll be able to get your 20% deduction. And basically what they're going to do is they're going to take your business. So for example, let's say your Schedule C, the net income is $10,000. Then you're going to get a 20% deduction off of your taxable income. So that's a great, it's really has been really helpful. And if you happen to have a loss, then that loss will be like in 2020, you had a loss in your Schedule C, but in 2021 you had income, then you can offset the two and then get the 20% in the following year. So that's good. I'm not going to go too much into the self-employment tax. Obviously, with you as being a self-employed person, you've got to pay the self-employment tax, which is both the Social Security and Medicare, as an individual, and then you have, as a company, you have to match it. So you've got to pay both of that. So basically you're paying 15.3% of self-employment tax. And there are some great ways to pay those estimated payments in. I would highly recommend, especially now with what has happened with COVID and everything, I would highly recommend paying everything electronically. Do not mail a check in. It's just, it's going to take, I think, the IRS another year or two to get back to quote unquote normal, if you will, on that. But you can look at the slide and read that and how to make some of your estimated tax payments. But I do want to, get into the last bit here on some of these other taxes. We spoke a bit about it last week on the franchise tax. And what we were saying is that franchise tax, this is for the state of, to the state of Texas. If you are an LLC, a sub-S corporation, or a regular C corporation, you are subject to franchise tax. If you are a sole proprietor and just file a Schedule C, you are not subject to it. But if you're anything else other than that, you are subject to it. You have to file a return every year. But as far as the payment, the cap, or I guess the threshold is if you have more than $1,180,000 gross dollars in gross receipts, then you would not owe any tax. But if you had 2 million in gross sales, then you're going to owe some tax. And I will say that, and I didn't mention it, but I want to mention it right now before I forget, in case any of you have not heard, because of the because of the storm, the ice storm that we had, every county in the state of Texas has been declared a disaster area. And when that happens, then the IRS can come in and they can give us time, extended time to file our tax returns. So they have done that. So your any return that was due between after February the 11th, you have until June the 15th to file it. So that means if you file a 1040, you have June till June the 15th to file the 1040. And then if you still need an extension, you can do that until October. If you were a partnership or a sub-S corporation that would be due here coming in March 15th, then you've got now till June 15th to do that. And I say that with the franchise tax. The franchise tax is normally due on May 15th, but now they have also extended that due date to June 15th. So put June 15th in your brain. That's when you've got to get all of this. And if you owe any taxes on that 1040 by chance, you do have till June 15th to pay it in, and you won't be penalized for not paying it in by April 15th. So anyway, that's a franchise business personal property tax. Just quickly, we kind of had this issue. I believe Fresh Arts a couple of years ago was saying, hey, some people are saying, hey, I'm getting hit with business personal property tax from at least Houston, it's Harris County. And so basically what that is you owe business personal property tax on the assets that you have and that you use in your business. And you have to render that property annually. And that report, that business personal property rendition report, is going to be due April 15th. I haven't heard of any extensions on that. And if you happen to have, if you own your car personally and you use it both for business and for personal use, then you can get an exemption for not having to pay business personal property on that vehicle, but you have to apply for that. And the application date for that extension for the vehicle is due April 30th. So there's a lot to talk about on the business personal property tax, but whatever you have, your computers, equipment, whatever, your band instruments, all that, whatever it is you have, you've got to pay the personal property tax on that. Sales tax can be a whole nother topic, can be a whole nother class in itself. But just know that you've got to charge sales tax on, for example, the art that you sell. And it's a lot easier to do art, to say, I'm going to sell something for $100 and then you owe tax on that. So now I need to pay you $108.25. So that's kind of really it in a nutshell. Payroll taxes, those are something that if you actually have employees, you need to pay quarterly. You need to withhold the Social Security and Medicare and income tax from these employees. You pay it over quarterly with the Form 941, and then you pay Texas Workforce Commission quarterly on the first 9,000 of wages per employee, and federal unemployment is annually, and that's on the first 7,000 of wages. So I made it 4 minutes to spare.
So Kathy, I've put the business personal property tax. I've got a couple of the counties in the state of Texas over in the chat. Like Travis County and Harris County. Bexar County, yes. As far as I know, every single county in the state of Texas has business personal property tax.
Right.
You should maybe just Google business personal property tax and the county that you're in. I'll try and find Bexar before we leave tonight. But yes, it includes Bexar County.
Absolutely.
So I think you did such a great job, Kathy and Lisa. Thank you so much for answering all those questions. I think that's going to be it for tonight. If you are a TALA member and you do have some individual questions, you can always fill out a request form and we'll try to get you to the appropriate person. If you are having another situation with grant funding or anything related to taxes and COVID and what to do, you can also fill out our COVID relief page. That is also on our website, and we are doing one-off matches for those, and just to let us know what you need, and if we can, we'll try to definitely help you out either way, whether you're a member or not right now. On behalf of Fresh Arts and Awesome Music Foundation, I want to thank them so much for their work with us over the years, helping us market and all the help that they do in our community. They're just invaluable assets to artists and nonprofit organizations. So unless the two of you have any last thing to say?
No, good luck. Thank you for your attention, and we really appreciate you being a part of this class today.
Great. Thank you. Good night.
Thanks so much, y'all.
Bye.